Hi guys, welcome to the Seven Money Show with me, your host Sean. If you find any of today's entertainment informative, don't forget to smash that lovely like button. It's almost as lovely as me. If you haven't subscribed already, don't forget to smash that sexy subscribe button. And if you want to be a hero, hit that bell notification. You'll be notified when a new video comes out. If you're looking to support the channel, there's links in the description below to free trading apps. There's free trading apps. You have Freetrade, Trading 212, and Stake. The Stake will give you a free share up to $200 when you deposit $100. If you deposit pounds, it will convert it instantly to dollars. There's over 3,500 US stocks. Trading 212 will be 100, and free trade will be £100 share. If you deposit £100, or with free trade it'll be £1. Remember, it's up to £100. You won't get £100 share. Sorry about that. Now, there are also links to kits that I've been asked about in the description, leading to Amazon. The reason it's leading to Amazon, when I just done a video about Amazon, it's saving money, and if you have an Audible account, you can get the books for free. However, if you get the books for free, I don't get any commission. So I'll get on with the show. Here's my tips for today. No, not Amazon. That is too easy. Well, let's start with take two, shall we? It had a great quarter, but take two come out and said the reason for the great quarter was because everyone was shut inside. Now, of course. And they said they don't expect it to continue, they expect it to drop off. Now, what do you think happened then? It dropped. So it went from all the way up here on news of a great quarter to dropping like a lead balloon. So if you look where it was, see, 109, 112, 124. See, it's about 112 to 127. Yeah, I mean, that's crazy. Crazy when you think about it. What people don't realise is, yes, it's going to drop off when people are back to work, because if you're at work, you cannot play video games. You cannot stay up all night playing video games if you've got till 3-4 o'clock in the morning, if you've got to get up at 6 o'clock and go to work. You cannot play through that the day if you're at work all day. There is the other side of it, of course. There's lots of people who haven't played video games, who have been on their own, who, to escape the doldrums, decided to start playing video games. And once you start, you're hooked. I mean, with me, I started playing simple Football Manager, and I was hooked on video games for about 10-15 years. It took a lot for me to stop playing video games. Now, it took an ultimatum from my wife to say, you either give up video games or you give up football. So I gave up video games. And now, you know. And I said, don't give me a whole moment like that again. If this is the last time. But the thing is, this is going. If this drops between 110, 120, this will be a buy. I think it has a PE ratio of 47. It's a high PE ratio. Don't get me wrong. But you've got to remember the sector it's in. Most of these games platforms, they're trading on the 100 marks. You know, especially now. You have to. I think this is only $10 above the January lows. I'm waiting to see it drop again on this news. The CEO only said what was true. It's because people are locked down that they're playing so much that we're earning so much. Once the lockdown's completely lifted and everyone goes back to work, which will be soon, go back. I'm going to take a small position once it hits 110 to 120. If it hits the 100 mark, I'll take another position. That's why I'm taking a small position. And I don't want to make it too much. I'm going to do a video later about the stocks I'm pulling out of permanently. Make sure you subscribe and hit the bell notification to be notified of that. Now, the next one, spec stock, space, the final frontier. I mentioned it a few weeks ago, how it's worth watching. We've watched, and when it was here is when I said to watch. I said it's on its way down. Richard Branson has just sold his. It's going to go down again. We watch, and at the right point, we buy. Now, it's at 14.71. I think it'll go down a bit more. I think between 10 and 12, we buy. Yeah, of course, this is my opinion. This is where I'm buying. You can set your own price point. Now, you set your own price point. You'll have to have your own plan, because the worst thing you can do is go into the stock market without a plan. You have to have your buy point. You have to have your sell point ready. Now, you can change that depending on what news comes out, but me, I like to have rigid buy and sell points. And then if news comes out and you want to scoop up more, or you want to change your buy point because of that, you can. Or if you want to change your sell point because of that, you can. I find you might want to sell 50%, and then when you hit your sell point, and then keep 50% longer. If you're using a free trading app, like one in the links below, then one of the links in the description below, then it doesn't cost you to trade. So, and then you can pick up one of these for the cost of placing a trade anyway. I just think they reckon this is going to be it's going to be $1 trillion market, and it's going to be. They're talking about EV cars, and yes, EV cars are the future transport, but they're saying space transportation is the future. And yes, we all believe that Elon Musk can break the code. We think Jeff Bezos has the money to buy the technology. I actually have shares in a company that provides technology to Amazon, and the thing is that they have their big problem is getting to outer space, breaking the atmosphere, and that's where more petrol, a majority of a rocket's petrol or fuel is used to break out of the Earth's atmosphere and gravitational pull. That's where most of it is. And to tell the truth, here they won't need as much fuel because they're just going up to the edge of space. They have done it already in Texas. They've gone to Texas space. It was classed as Texas airspace, and they've got the wheels perfectly balanced. They've taken a lot of data from that. Basically they want to do some trips, get everything perfectly balanced so they can take passengers. They've already got a lot of deposits. If everyone who's placed a deposit goes on a trip, they will be raking in the money. Now, Branson only sold his stake to fund his other Virgin properties. I understand that. I've done videos where I've bought shares and I thought this is one to hold forever. Once it's gone ex-dividend and the price has gone up as well, and I've hit my profit point, I've sold so I could move into another share. I had a whole list of shares, and I'm not a rich man. I'm not making money from YouTube videos. What I've done is I say this one share, I've got $1,000 in this one share. I have these 3 other shares which I think are going to go up as well, that are also about to go ex-dividend. I've got the qualified for the dividend from this one share. It's increased in value. I sold it, moved it into these 3 other shares, got the dividend from these 3 other shares, and they've gone up as well. That's the same as what Branson's done. As well as that, Branson's done it because the UK public were in arms about the government giving him money when he has all this money and assets himself. So he's sold some of this, he's sold some of his other assets. He's leveraged 1% of his island to fund it, to make it look like, oh, I'm making an effort to fund my business and they're giving me some money, or I'm sacking 30,000 employees. But I think this is one, if it drops further, we should be looking into as a super spec play. Taro Pharmaceuticals. Now, look at that, guys. This is one that doesn't get a lot of traction. It's between 56 and 100. No dividend. Don't mind that because it's a growth stock. P ratio of 11. Now, I've got it here. This science-based pharma company, 3 entities. You've got Taro Israel, Taro Canada, and Taro USA. Now we know Israel have a lot of great scientists on the south. 3 places you want. Well, I'd say there'll be 5 places you want a pharmaceutical company. You want the first 2 are going to be Israel and America. The third is going to be Canada, then I'll say it'd be split between Switzerland and the UK. So this is the first three. Now, they have a lot of brands on it, you know, and yes, you can do this research yourself. P ratio of 11, and you see here they've issued 2020 numbers. Profit margin 38%, debt to assets 10%. Now, for a pharma company, that is bloody good. And I'm not going to delve too much on this. The next earning date's in August. Arrowhead Pharmaceuticals. Now, this is a super spec play as well, because it's from 20 to 74, and this is towards the low end, as chance to double. Now, sorry about this. It's a gene slicing company. Is using RNA. Now, the thing about this is it's a preclinical stage. And it's mainly for liver disease, and it has a high PE ratio. The problem is, now it has a 40% profit margin and a 30% debt to assets, which looks good, but as I said, it's a very super spec play. You've got to remember, with everything that's going on, they're looking at mRNA, which is micro RNA, for this. Now, although liver disease isn't part of it, you don't know if they're working on something like this. I did a video about a company which was working on COVID-19, and the reason I knew about it, the only reason I knew about it, was because I owned shares in it, and to comply with UK law, I had to sell the shares. Now, the thing is, even if it isn't working on COVID-19, I think this is one of those that you have to do your own research, see if it fits you, and if you can get it down in price, I mean, if you can get it around the $20 mark and just leave it in the drawer, then when it comes back, when it 3x's, leave a price alert if it 3x's. Now, Sony is a corporation that's been pre-war, P ratio of 30. We all know Sony. They have been an innovative company. They do a wide range of stuff. Look at them. They're in the middle of what they were. Now, people do not. They keep forgetting about these companies like Sony. Now, I was speaking to someone, and he said to me, "Sean, forget about America. I've gone, I can't. America's too profitable for me. It's gone. America and Canada's where my focus is, and I have some on Europe. It's gone. Are you in China? I've gone, yes, but I'm coming out of China because of the trade war with America. He's gone, well, that's why you should forget about America. Walmart's, all their stuff comes from China. And he's gone, then don't forget all the printing, money printing. We don't know. Their economy can go either way. It can crash, or they can keep printing, and the dollar could be like Tanzania, or another African country where they were walking around with $1 trillion notes, and it was worthless. So, it's gone. You might want to look into Japan as a market. So, dividend yield isn't worth talking about. It's under 1%, but the PE ratio is good. You see here, it has a 7% profit margin, which is low and debt to assets 82%, which is high. The thing is, it is one that survives, has cash on hand. They're very diversified. They do electronic equipment, instruments and devices for consumer, professional, industrial markets, network services, game hardware, software, TVs, audio and video recorders and players, still and video camera, mobile phones, semiconductors. This is everything you kind of want, really. They're so diversified in what they want. I was surprised with the fact that they do kitchenware, and they're making robots as well. Now, I mean, if you go to Japan, you see a whole array of what they're working on. You don't have to go to Japan. You go to certain places that you'll see what they have in store. But I think this is one to watch. I want the price down a little bit more, but I think it's worth it. Now, spoke about Take-Two. I just think that Take-Two and Space will be my 2 picks of the day. Don't forget to hit the like and subscribe button, and I'll see you in the next video. Goodbye.